recording here. So what's good, everybody? Today we got Joey, one of Matt's trading partners from ACTG, up here to share some value about the wonderful world of smart money. So Joey, you can take it off and go ahead and jump right
Yes,
into
sir.
it.
So just want to say I appreciate you guys' time. Um, you know, it's important that we take time for ourselves and you know, sacrifices. So yeah, here we
Yeah,
are sharing this moment. And basically, I'm gonna look over the dollar index a little bit and maybe a couple pairs and some indices.
sounds
And
good.
yeah, I'm just gonna go over structure. Basically a simple version of what I like to look for within the markets. And then yeah, any questions, feel free to just type them in the chat or yeah, ask them freely. But
Sounds good, bro. You should be able to share your screen now.
sweet.
Let's
So
go.
yeah, really no charts for me this morning. I hosted London session a couple
Mm-hmm.
nights ago and last night. So yeah, really so for the most part, simple breakdown of what we like to look for is really three things, okay? So number one, that being liquidity swept, right? So, you know, an example of liquidity, there's internal and external liquidity, right? Some external liquidity would be, these highs and these lows, right? This is external liquidity. Um, and it all depends on, the time frame and the current trading range you're looking at. But for the most part, that's external liquidity, right? Some of you guys might have a little understanding of that. Then within these trading ranges, um, there's internal liquidity, right? That gets swept all throughout the market. It's just how the market moves, right? Um, there has to be buys and sells. There has to be orders taken, and it's just how the market moves, right? So first thing first, um, oh sweet, yeah. First thing first, liquidity is what we like to look for, being swept. Um, Second is the break of structure. And I know some people, there might be break of structures all over or in different places. Um, for me personally, and some people see like, I've heard of a change of character or a market shift, other terms. It's just another word for price doing what it does. Yeah, changing directions, shifting structure. So um, yeah, really for me, so yeah, once I see liquidity swept and so liquidity swept, a break of structure, and then after the break of structure, when there's imbalance left behind, is my third confirmation, right? Um, so yeah, just for example here, looking right. So see, we have this lower low, lower high, lower low, right? We have some liquidity swept, a new low. So that's number one. Number two, right? We get that lower low, lower high, lower low, break of structure, and right on this time frame, this 4 hour, there's no imbalance in there. Okay, my bad. It's supposed to be bullish. Uh, yeah, but if we, that's why it's important we switch back and forth from a small time frame to a bigger time frame, and vice versa. Because on the 4 hour, no imbalance. On this break, here on this 1 hour, we do see this imbalance left behind. Right. So really, yeah, that's number three, the imbalance left behind on that break of structure. And then number four for me is the area that sweeps the liquidity before the break of structure. Um, you know, that's yeah, our point of interest, right? So this whole push down. Um, and right. So sometimes, we look for that break of structure or that sweep at all-time lows or all-time highs. But sometimes, we get that reaccumulation within a previous area. of accumulation, right? So yeah, following structure, this is our previous area of accumulation that has swept liquidity, over here. These buyers right here, early buyers got swept out, price broke to the upside, and right, just revisiting that same area, looking for more evidence. Yeah, so that's just basically an example of what we like to look for. My go-to setup, really, those 4 confirmations. Yeah, but really, other than that, that's my setup. If you guys have any questions regarding that or
Yeah, I have a
anything,
question.
yeah, for sure.
So remember today on the New York session when Bastian was talking about the imbalances. So when you spot imbalances, like what do you personally look for an entry as an imbalance? Because uh, we all like kind of try to look for imbalances, but some of us still struggle, and myself too. Sometimes I just spoke about it with Matt that I don't know when to get in when price comes to an imbalance because sometimes I wait for that deep push, like let's say 50% of the imbalance, and it doesn't
Gotcha.
happen because it just nicks into it. So what's your like point of view on that when it comes to an imbalance and how do you enter on that?
So for me, it comes down to planning my trade and trading my plan. So really, I yeah, I'm not looking at the market or looking at really areas um, during the trading session unless I've already previously identified them. Um, so right, just for example, and I know anybody can bar replay and go back
Mm-hmm.
and see why price does what it does, but this is exactly what we look for, and uh, it's about following your plan too, right? Managing your risk because our strategy isn't perfect, and that's the beautiful thing is you don't have to be right every time or have to win every trade. We can lose more than we win. So for me, um, when price does come into imbalance, it's all dependable on you know, first of all, time. Um, and then yeah, right, the key level we're at, like where we're at, if we're looking at, the chart, and then how fast price comes into there, if it wicks into that imbalance, or if price is coming, in a steady structure, right? If we have lower lows and lower highs following in that counter trend, right, to that area. So yeah, for me, it depends how price is coming in there.
Mm-hmm.
Um, really at all-time lows and highs. So just for example, right, this low swept. Um, there's liquidity right here. So this is like a point of interest, right? We could have been looking at, and you could have been looking for buys in here, right?
Mm-hmm.
Um, Under here, and yeah, say you just take the buy when it comes in, right? Little imbalance. Uh, there was some bullish reaction, so you could have got profit from there just entering a buy. But overall, right, structure that was formed closed below, and right, just evidence of bearishness. So and say your stop loss wasn't break even, you kept your stop loss, you get clapped, and then you see lower low, lower high, lower low, a break, right? And you're like, hey, maybe when it comes to this imbalance, I'll buy. And nope, it doesn't happen. Okay. So for me, like you're saying, how do I know with the 50% or I'm just at what part of the imbalance? Um, yeah, I typically stick to the discounted price levels. So I do want the whole imbalance to be filled. Um, we know that it doesn't have to happen. Price can just barely tap and run away. Just personally for me though, I do like to see that deep retracement and that discounted price. So I like to see the imbalance filled almost completely and be touched. So let's just go to a smaller time frame. Um, Here we are. So yeah, just going back right to this area. Right. Say we see, okay, just looking, we see a major low swept and price break structure, right? You guys see this point of interest. Okay. Right. let's just come over here real quick. Take a look at this. Just to give you an example of like if I
Mm-hmm.
would take this trade or not, because on the 4 hour, yeah, you see the breaker structure, right? And then let's measure that real quick, right? And it all depends at what you're looking at the 50% of too. Some people measure bodies, wicks, from this high to that low. Some people will be looking at, this whole push down, right? So yeah, previous lower high to lower low, before breaking the structure, right? 50% is up here. Um,
Mm-hmm.
yeah, so me personally, seeing price coming down into here, right when it gets down to there, I wouldn't have tapped the button. I'm not just gonna shoot and you can. There's people that do, and you know, we can see the risk reward here, probably 1 to 3, for sure, 1 to 5, but that's holding it for a while, and that's swing trading, right? For you when you just take it off the 4 hour breaker structure. So and okay, so now when we look on the 1 hour, right? Then this is how I look at the imbalance personally. Uh, so for me, you see this wick right here, right? So
Mm-hmm.
this candle, that means it filled up some of this and it came down and came up, right? So for me, the imbalance starts right above that and then to this under this wick right here. Nothing's filled down on this side. Um, so yeah, that's our whole imbalance, right? And when we go to a smaller time frame, right, you could probably break it down more or see it's a little different, right? Um, price fills it. When price comes to the 50%, that's when we see structure being formed too. Because sometimes it does just wick and take off, but here we see lower low, lower high, lower low, and then we get this new range created, right? So yeah, like me personally, really that's why I talk about the key levels too, because it all depends on some of you guys, I don't know if you guys listen to Mike Miles. He was one person I looked up to when I first, about 4.5 years ago, started trading. And yeah, his big, quarter theory and numbers, right? Key levels. So for me, I like to see the 80s and 20 levels, right? And 50, right? 80, 20, 50. So, you know, right here, you got 10,750, quarter level, 10,800. Um, So just yeah, key level, right? I'd keep that in mind. But other than that, you know, nothing really like clean. However, when you see more price action formed, right? Highs and lows created, um, the market setting itself up, right? You do see internal liquidity being generated. And this is what the markets do, right? People, when price comes back down to here, they're like, hey, right, area of interest, some support. There's been buying from here, right? And so what do people start to do? They look for buying. And who knows, right? Maybe on the 15-minute or 5 minute, there was some structure break right here, right? But on the 1 hour, you didn't get no close, okay? So it really comes down to following structure and really just managing your risk and managing your trade, because you can get in a trade off an area. Like, yeah, say you entered in off that wick right there, right? When it swept below this, and it's just because it came in there and swept it, right? You just take the buy button, stop below, instant, you have instant profit, right? And then you break this high, but all that does is just to come sweep some more liquidity below to take out your order, right? You're just part of the buy side liquidity. Um, so sometimes the trend is your friend, and sometimes it's not. Uh, just being aware of the overall direction, and yeah. So for me, like if I see liquidity swept like that by a wick and then a break above, I would be looking for sure, like to tap it as soon as it comes in inbounds off of the area like that. So right. this wick swept this, right, and then closed above. So it's just coming to right there on a smaller time frame. And this is after evidence of, there's this evidence of accumulation, then we have reaccumulation, right? And this is just some liquidity swept in a previous point of interest. So, right. So that wick, right, swept all this internal liquidity, all these buyers, and really, you know, it's a low, lower high, lower low, close above. We have high, low, low, high. Some people, you know, thought some selling was going to happen, look like a breaker structure with a body, but on a 5 minute or 1 minute, you know, it's still respecting structure on a smaller time frame, right? However, this 15-minute closed above, high, low, higher high, and on the body, you know, you see it's closed below, and some people think, oh, you know, prices have come back up for redistribution. Um, right, a smaller time frame, we know this is just coming into this point of interest and forming structure, right? That's just all it's doing. So really for me, after it close above on a 15-minute, and then when price comes into imbalance, I would be looking to just tap the button. But besides that, yeah, you know, if we have like an hour breaker structure or a 4 hour, you know, I will not just tap the button when it comes into an imbalance. Let's see. So yeah, personally, I did take this, you know, we were on New York session when this happened, right? And I believe Bash, right? We're both on the session. I believe we're looking at this distribution at this high, right? Above this high. But overall, right, with New York Open, we've seen all this liquidity swept on the sell side and the buy side. Just structure, right? And, yeah, so after this close above, when price came down to this point of interest, right? The discounted price, 10,725, somewhere right there, right? Stop below the low and target. So yeah, and see trades like that too, you know, um, I wouldn't necessarily say um, you know, scary, but you know, emotions. We all have feel. We're not robots. So
I feel you.
yeah, that's the thing for me too, is why I'm not skeptical, but I play it cautious or safe when just entering a trade when it comes into the imbalance, because I know it can just trade straight through that, or I could be sitting in drawdown for a while, or you know, the price could look to run away or like it's going my direction, and I get off the chart and it boom instantly just cops me out the next couple of minutes. So I
Yeah, I
would,
feel you.
yeah, I would just recommend too, when you enter your trades, just depending on the type of setup you're looking at, um, how to follow your trade or how to manage it. Because some trades I do just set and forget and hit TP, some are stop loss, and then there's others where I get in and I personally feel like I need to manage the trade or sit and watch it just to see if how structure plays out, or how I'm going to manage my position, right? So
Completely had that with GBP cat from yesterday.
yeah,
Yeah, it came into the imbalance. I was in a sell, needed to adjust the stop loss a little bit, and I was in two positions because I had a sell from earlier
uh-huh.
that didn't hit TP, and then it came back, and both positions were in drawdown, and I was like, ah,
Oh
damn.
snap!
And
Yeah,
then close to one of them at break even roundabout, just a little bit in profit because I was like, yeah, I got to take out that risk
but
out
I
of the
can't.
market.
Uh-huh.
And then the other one happily went on today. But yeah, I
Oh sweet.
definitely feel you. So you basically wait to kind of form on the lower time frames then to see what the
How
imbalance.
prices? reacting from the area. Yeah, exactly. Because
Okay.
on the 5 minute, it could look like the wick is taking off, but on the 1 minute, it's just to come to that previous lower high and distribute and to take those buyers out that thought they seen a 1 minute breaker structure to the upside.
Hmm.
Um, yeah, this is a whole game of psychology. It's like a chess, and each move is for the next move or for other moves. So really, just we're anticipatory traders. We don't predict, we don't guess. We anticipate based off of evidence given to us from the markets. So
Hmm.
yeah, just for me, I just like to see more and more confirmation. Um, yeah, really, the only time those quick imbalance fills I look for in the 1 minute, and those are the ones I'm talking about that I manage my trade, or I'm just sitting there uh, watching the candles being formed, right? Um,
Yeah, because today was the perfect example on the NAS. I don't know if you were in New York today.
you know, not this morning.
Okay, so there was a perfect thing, and where an imbalance formed. I mean, now NAS turned bullish again afterwards. Um, but like on the 1 minute chart, it did exactly that. There was a structure break on the 5 minute,
Uh,
just that after market open, and then that's why I asked with the imbalance because it was pushing through a bullish imbalance, forming a bearish imbalance, and it just barely tapped into it and turned out to be a 1 to 6 in the matter of 2 3 minutes.
oh wow, just instant, yeah.
So
Okay, yeah.
that's why I was asking because like I like to do it after the open. Like I don't trade like to trade right at 30 and jump
Uh,
into it, but like
yeah.
afterwards the structures are really
That,
looking nice.
yeah, that's exactly it's a big thing for me because I used to just be waiting pre New York or right for New York to open and think a move's gonna happen and there are moves that happen but sometimes it's just the market opening and it's just getting ready for the moves to be made or for structure to play out and so now and I used to be mad sometimes if I wake up at 6:30 or 6:35, I'm like, I missed New York or I'm not ready, like looking at the charts, but I started to realize and see more plays play out towards the end of New York session or, a couple hours in, and you start to see structure or the way that price wants to go. And it just gives you more of a bias and a higher
Mm-hmm.
probability. So, yeah, like,
Just to ask in between, does anybody have any questions to Joey? Because today is more different session from last week's with Matt, because now we see a different approach on it. Because I like your approach because you're a little bit more observant instead of pulling the trigger like the guy.
mhm.
I mean,
Yeah,
you didn't mention the 15 second yet, so.
yeah, no, that I'll get lost on there. As much as it does help, and you can get those sniper entries. Just for me personally, I see myself getting lost on there, or like my bias will start to switch up as much as it'll look or I'll see bullish before. When I hop on that 15 second or 1 minute, sometimes my bias changes. So I'm like, it could do this or it could do that, which is good, right? To be mindful. But sometimes you just gotta trust your analysis or yeah, stick with your plan.
You have any trades right now, your positions you're in that you maybe be able to run down on why did you enter and like targets
Yeah,
you looked at?
for sure, for sure.
Yeah,
So
Gio and I are connected. He asked the same thing. Like if you can do an analysis from scratch, kind of, so that maybe it helps if you have a running position right now or anything from maybe a couple days ago. Because I know the NAS longs from last week Friday are still, some of them are still holding.
sweet. Okay, so yeah, I could show you guys. We'll jump back to UCAT. I'm
Yeah,
in
sure.
this currently a position I'm in on a sell, right? Um, up here at this 1.36780 right there. Um, and I got in right there on that wick. Price came in here, and yeah, I held through that. So really, right, bias overall. UCAD looking at structure, we see candles formed right, and it's like some people just see candles, some people see all the bullish and bearish in between. Some people see liquidity resting. There's so many ways to different ways to look at it. But overall, let me just put this up for you guys real quick. All right. Just a reminder, what we look for. First, range structure. So that's what I'm looking at, right? I see the highs and lows formed, right? Then we see our points of interest, the areas that sweep liquidity. So imbalance, liquidity, and then we measure with our fib, right? So, right, structure, seeing this, like we talked about this, that could have looked like a break of structure to some people, right? But just letting the market play out and do its thing, right? After this close above, this is our previous high low. This is right previous high swept. So now it's our new higher high. Right. So this is the daily, and you see this wick come above before, a little bit of distribution, and then come back up. So that means on the 4 hour, the 1 hour, there was some break right here, and this push up is just to fill the leftover imbalance or the price action, right, before redistributing, right? So we see a close, break of structure on the daily, after liquidity swept, right? So my 3 things I like to look for: liquidity swept, break of structure, and imbalance left behind, right? So on the 4 hour in this area, right, we do not see imbalance on here, right? 1 hour, there probably is 15-minute, whatever, right? We see price fill that area and nicely distribute, right? Lower low, lower high, lower low, okay? And right now we're just reading price structure to see what it was doing and when it comes into the area, right? So we have lower low, lower high, lower low. This is previous lower high. We have internal liquidity. We see structure, right? The counter trend. See that high, 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 low, high, high. Some people see that as a break of structure. And it's like, no, it's just, it's still respecting this whole push, right? It just swept some liquidity to push higher, right? Just the market doing what it does, highs, lows. So higher high, higher low, new higher high created, and then we get a close below both lows. So some people, right, there's a break of structure where it just closes below one low, and then there's a break of structure where it closes below a couple of them, right? Like a significant break of structure, right? Closing beneath a couple lows, right? Boom, showing evidence of distribution. Now this push up is our previous lower high and area to look for redistribution, right? So let me just clean that up real quick, right? So after this close below, right? And it happens over and over, right? Look at liquidity swept, break of structure, imbalance left behind. So look at that whole thing's imbalance, right? On this one candle, that whole candle's imbalance, right? So it's like, first of all, we know price can push up to the body and then distribute from, right? That's valid. But me personally, when I mark this imbalance, I'd be waiting up like right here, from this push up, right? And you gotta be mindful of point of interest, right? So, right, you could have sold right when it came in there. This is the 4 hours. So 1 hour, 15-minute, maybe there was some redistribution or the break of structure, right? Because we do see it come back in and distribute, right? So lower low, lower high, lower low. that's current structure. People participate in cells, whatnot, right? Then we see this accumulation. Okay. Boom, break a structure. Some buys could happen, they could not happen. Okay. Um, it's not the most high probable because we're not like in a discounted area for buying, but we are beneath all this internal liquidity. We swept right here. We're in this previous push down. Price comes, lower low, lower high. Doesn't create a lower low, but on a smaller time frame it does. That wick, right? And we see it's close above. Buy, right? So this is the counter trend still up into this area, right? So 4 hour it filled daily. Okay. Right. Yeah, so 4 hour that wick it filled the whole candle, right? But I guess it just wanted some more. Um, and it came back to the same area, respected structure, right? This body. And yeah, it does what it does over and over again, right? Swept some internal liquidity. Um, we see the break of structure, higher high, higher low, higher high, and right, it closed below this low, closed below this low, and closed below this low, right? So, right, break of structure to the downside, redistribution. So now this whole push up, right, is our point of interest, right? It's what swept the liquidity before the break of structure, and it has leftover imbalance, right? So, right, there's this wick right there, the candle. So I'd be looking at this imbalance right here. And right. And this whole area is valid, right? This whole area for distribution, starting from this push up, that swept liquidity, right? Some people look at wick to wick. I was looking at body to body. Mainly, I'm looking at the whole that drive up. That's
That
swept.
last candle that pushed through.
Yeah, right. So discounted prices, or if I'm trying to be more sniper, I'm looking right here, or this is my point of interest right here, and then I'm just looking for some distribution in this imbalance. And it depends how the 4 hour and daily is looking, but after we see this, this evidence of distribution, this last significant area right here, this previous lower high, this is our new lower low. Okay, so right, price, and like I was saying, from here, that's Bash is the one that helped put me on game a little bit with this. Is with price doesn't have to come all the way up to where you want it. It can run off from the beginning of the push up, or from the body. So that's why I'd be mindful of sometimes too. Even though it's like, oh man, like it didn't come to where I wanted, I missed the trade, like it's already redistributed and it's taking off. Like no, you never you can always catch a trade, right? You don't have to be in everything, and it's just patience. So right, thing, right, this is 4 hours, so more times built up, a couple days. We come back into this previous area, and we see distribution, right? Right here, high, low, high, break of structure. Okay, so clean 4 hour break like that, honestly, to be real, I would be having a limit set or something at that discounted price,
Where it matches that imbalanced price zone.
Yeah, because that's the thing too, because having this imbalance marked up, or on the 4 hour, you could have tapped the sell button too, right when it came in there, right? But price could have just drove up a little, and you could have just been sitting in drawdown, and I don't like that feeling personally. So I wouldn't have just tapped, and maybe above this high right here. This is 4 hours, so maybe on the 5 minute, 15 minute, 1 minute, we did see a break of structure redistribution, right? And that's what caused it to come down, right? Or it didn't, but there could have been a break of structure, right? And you could have played right there. after the tap and break. But that's a smaller time frame break of structure, right? Within this higher time frame point of interest. So what I like to see is this high time frame break of structure within a high time frame point of interest, not a smaller time frame, right? So after I see that higher time frame break within the higher time frame break, then I'll look for a smaller time frame within that. So right after that break of structure, this being our point of interest, we do see price respect to that area very beautifully, right? And people could participate in sales, you know? Who knows what the RR is? Every trade's different, you know? We could be in the same exact trade, and it's all about how you manage it, and entries, exits. So how much you take partials at, you know? So right, we see distribution from here. So this becomes our previous lower high. This is our new lower low, right? So yeah, I could have profited from that area. However, right beneath these lows and this imbalance, right? And that's the thing. See, I would have been waiting for buys down here. Like I wouldn't be looking for buy at all until it came anywhere in this imbalance right here. But this deepest level imbalance it could fill. Or right here, this imbalance over here. Like those areas are areas I will just tap the button, or like I would be looking on the 1 minute or 15-second to see some accumulation out of.
Because you have so much liquidity in between them.
Exactly. Extreme points of interest and lots of liquidity being swept before it comes there. So yeah, right. So right here, I wouldn't be looking for a buy. However, there was accumulation there, you know, and a small time frame and a counter trend. This wick came above this, still respected this area, right? Even the body, you know, this wick came up, and then we hit the high, low, high, close. So yeah, multiple selling opportunities from that 1 4-hour break of structure, right? However, the more something happens, the more obvious it becomes, the less likely it is to happen, or the more likely it is to get clapped. And that just goes back to me, like the trend can sometimes be your friend, and sometimes it's not. So it's just a game of probabilities, and you know, there's a random distribution of buying and selling and wins and losses. So
there was a question in the chat. You said in the ideal situation, the price will come back to 50% of the imbalance. Is there a situation or price pattern that you should look out for to not enter the trade around that level?
That's a great question. Very great question. Is there a pattern or price pattern for times to not enter? Yeah, so okay. And this goes to something, you know, Matthew, type of trade Matthew takes and something he showed me. So we'll come back to that area on UCAD. We'll come back right now because that's a sell we're in. But just to answer that question, you know, an ideal time where I don't want. Yeah, so if I see, let's see, 1 hour. Right. So for example, okay, here, right, just current price action on UCAD right now, right? So when we first hopped on, I had a little markup, so I just cleared real quick. It was from our London session, okay? We were looking for accumulation point of interest, right? We've seen it happens a couple times. And you know, it's been getting clapped, you know, not respecting certain areas. So, right, we see some more evidence of reaccumulation right here, right? And someone on our session, ACTG, asked about would I be looking for it to come higher or lower past one of these before entering, or if I would just wait for it to come in. And my answer to them was, right, like liquidity can get swept in any area. So that's why I was like, this is external liquidity. This is internal. See these equal lows right here? That's internal liquidity that was swept while still respecting its point of interest. So my answer to them was like, here, right, we see this accumulation within a previous area of accumulation, okay? All right, beautiful structure. Price comes back into here, you see lower high, lower low, break, accumulation, high, low, high, and creates a new high right there. So see the trading range being formed, lower low, lower high, lower low, lower high, lower low, right? This body comes below this, still respects this, okay? So my thing was like, here, you know, like I said, the more times something happens, you know, sometimes the less likely it is to happen, or sometimes, you know, yeah, the more evidence, the better before it just takes off, right? So in this case, I was like, this area can just get swept, but still respect this area. Or it could just trade through, right? So that's one of like the situations where I'd be mindful of when I'm at a previous high or low, after there's already been a couple, you know, because this is almost like consolidation, or even though we do see some structure within, overall, right? Right after this, this was Monday or Friday to Monday to Tuesday, right? A few days of price action, we see these lows formed, and we see these relative equal highs formed, right? This liquidity resting above and below. So there's some people, yeah, breakout traders or wait for price to break out before they take their move. And yeah, so for me, right, nothing like, yeah, I wouldn't just be entering, but to answer your question, like so for me, being mindful of the area, like I was planning that trade, like looking into what can happen, right? Got swept, created a new high. And so, right, after price did this, lower low, lower high, lower low, close above. To be honest with you, I was looking here because I was looking at this area getting swept in this break of structure, right? This close above this previous low high. So for me, right, this is one of those situations where I would be mindful of, is like, even though you do see the accumulation, the break of structure, just knowing that we're close to this low in this liquidity, that, yeah, just all-time highs and lows, right? That's situations where I try to be cautious of entering trades, because it can just sweep straight through it, or it can respect it and take off. And really just being mindful of structure, you know. I see 1 hour structure or 1 hour wick, and when I come to the 15-minute, you know, like, yeah, no clear structure break or nothing, right? So lower low, lower high, lower low, like all this push down, any of this into here, because right, just up until this body right there, if you're watching price come down, like you're trading, right? This is 5:30 in the morning, 5:45, 6:15, right? So pre-New York, and you're looking for bullishness. You're like, hey, I was looking for buys right here, and say you get clapped on the buy, or you don't take the buy because it sweeps, and you're like, hey, I'm gonna take a buy right when it sweeps this liquidity. It's still in this point of interest, and boom, you get in a buy, and as soon as you get in a buy, it runs through your stop loss. Boom, claps you up, and this wick, all it does is boom, and it accumulates a little above. And then some people get upset, like, well, why did it do that to me, or it took me out, or
that's when revenge trading comes in.
Revenge trading, exactly. Or I should have had my stop loss here, and that would happen to me sometimes. I'd be like, dude, why did I get in that? Or I should have just waited for it to show even just a little bit of evidence of wanting to go higher before. So that's why it's important to me to watch how the candles are being formed, and like, because you know, when just straight selling, yeah, I'm not just trying to catch the bottom, not trying to catch a falling knife. So after I see a little bit of push up, then okay, maybe I could look for some accumulation, but no, it's still nothing, right? Just straight down. Um, see bearishness, and then we see these bullishness candles, right? Bullish, price comes, this body, we have the selling candle, and it just comes back in. So, right, we are that same area. So that 1 minute, right, we did get accumulation, lower low, lower high. This wick came below, lower low, and then close above, right? Price didn't come all the way down to this imbalance. Like I wouldn't have bought up here personally, to be completely honest with you. Even after seeing all that liquidity being swept, this new low, right? Even on the 1 hour, right? All-time low swept, liquidity swept, and then all right, no 15-minute, no 5-minute break structure, just a 1 minute break of structure. So yeah, people could have played that, right? After swept that by liquidity, tap imbalance, and run off. But yeah, for me, like this is an example too of where I would be waiting for price to come in lower right here to this push down. So if it took off right there for me, I'd look at a different pair. I wouldn't be looking. But yeah, just to reiterate the answer for the question, um, with price driving down hard like that, being mindful of uh, significant highs and lows that can be swept. So yeah, always looking left to get right. And
Oh, that's a good one.
yeah, it's like a puzzle. You put the pieces together, and sometimes it fits and plays out, and sometimes it doesn't. You gotta find another piece or wait for uh, till you put some other pieces together, right? Till more structure happens. So yeah, just significant highs and lows. I am mindful because I know they can just get swept, like even up here. High, low, high, see some redistribution from. There was no break of structure. Even if there was, though, just seeing equal highs like that, or it's like it can get ran through. Just swept for no reason before the actual move happens. High, 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 low, high, high, break of structure. After sweeping liquidity, break of structure, there's imbalance right there. Price comes back, fills it, creates a new low, and right. So
Yeah, I
back to
rather in those points like not take a trade. I was looking at gold, but like I don't want to have you skipping around now, but this is a really good point that you just made because I rather stay away than from that point to enter.
Then force yourself to see something when it's really not there. Yeah, if anything, look at another pair and come back after price structure's formed a little bit, or it makes them move, and then yeah. So back to this area real quick. We're talking about the cells. We've seen the distribution. I personally, didn't play anything of this. Just seeing all this happen, right? The reason, the reason I was going over this was to show you guys not only how I break down a chart, but this is what was through my mind, what was being broken down when I entered the trade, like the reason for it. So, right, daily, we're at the previous lower high, significant lower high right here. Even though this came up into this imbalance, I still knew that, right?
Mm-hmm.
Even though this filled this imbalance, this whole part above the imbalance, or like where it didn't fill, all this up here, I knew all this was still valid, right? And see, after it distributes from here, it could just trade through this the next time it comes up here. But for me, I still keep my eyes on those areas because it could just be more liquidity sitting in that area. And that's exactly what it was. Some equal highs, internal liquidity, right? Falling here, people selling their stop losses, and price came above, higher high, higher low, higher high, and redistributed, right? Came back, lower high, lower low, distributed more. We have this internal liquidity, equal highs. All right, swept, price drives up. So we see this is when I entered. Because some people trade support and resistance, or say, yeah, like that level, there's a lot of buying from, but really, yeah, that's not us. We see liquidity swept and a structure formed. So, all right. So after seeing major liquidity swept, that's number one. Number two was let's just get rid of this. Like, yeah, see, that's valid, right? We've seen distribution from there, but overall, prices came above and redistributed again. So yeah, number one, liquidity swept. Number two, got that break of structure. Number three, there's imbalance right there. Right, so you could have played out that first one. There's that gap up there. You see that too. Like, so I would have been mindful of that. So even playing a sell right there is risky or dangerous because there's this gap and some liquidity. See right here, like just being mindful, right? That it can get swept. So lower low, lower high, low, a little close above, but really the main picture, that's a lower low, lower high, lower low, right? So seeing more structure being formed, and then we have this counter trend back up, high, low, high. This wick came above, grab that last liquidity, like it swept this wick and that wick, just to come into this last extreme point of interest. So maybe on the 5 minute or 1 minute, there's like a little imbalance in there. Who knows? And that's the thing about backtesting, to see why it does the way it does, or the areas price reacts off of, or why it moves. Like, it's like learning someone, like a relationship. You have to know what makes it do the things it does, or why it does. And sometimes there's no reason. Sometimes our girl is like, why is she doing that? And you don't know. But there is always a reason. External circumstances, news, or worldwide factors. So it's a lot to take in, but there's so many other things, that like we can think about. So that's why I just try to stick to this main simple strategy, right? These few key concepts I look for, and because they just happen over and over, and it's just about finding the most probable area, or the right time and right price.
And then basically every push back up and break of structure, then on a lower time is a possible re-entry, right? So you could potentially, like, you never really miss the trade because you can get in later on.
Exactly. Yeah. Yeah, that's what I was trying to say. Like, you don't have to worry about missing a trade. Like, there's always a trade to catch. Like, price will never leave without you. That's what the evidence of accumulation and distribution is just signs of wanting to go higher or lower, depending on the area you're in. So yeah, after seeing this, seeing structure in here, closing below, seeing this body, respect this body, and this wick, right? So here it is again, what we like to look for. Liquidity swept. Yeah, liquidity swept. Break of structure. Close below, high, low, high, break structure. So this was our point of interest, right? That swept this previous area. Now, and see, after this close below, some people, this would have been a new point of interest, right? And could have been selling right here, but clapped. And it ran through these sellers too, to swept liquidity before distributing, and So the break of structure, number 2, number 3, imbalance left behind. That's 1 hour imbalance. Maybe on the 15-minute or 5-minute is imbalance higher, but just on this 1 hour time frame, that's what I mark up. It's a 1 hour imbalance. We have this whole push up, which is valid to see redistribution from. However, like I said, being more of a sniper, looking at the last push up wick, to wick up here, right? Bam, that's your point of interest. And then this is your imbalance, right? Like right there. So yeah, look, and price came in there, ran off, could have took a sell right when it tapped in there. Me personally, I like to wait for more evidence or for that discounted area. I'm just gonna check the data of my trade real quick to confirm.
Really appreciate it for sure. Just gotta check. Yeah, because we got the next call in a couple minutes here.
Oh, good. Yeah, this will be last thing right here, and
Yep.
I'm done. So right here. Okay, so yeah, basically seeing this distribution. People could have played this, right? Sell when it came in there. It was high, high, low, high, close below. Liquidity swept, this imbalance left behind. And so me, after seeing this was right before Christmas, right? Come back here again, first week of January, New Year's, after all this price action, right? We come back to a significant area where we've seen distribution from. We get high, low, high, looks like a break of structure. It's not, comes below these lows just to accumulate, right? Creates a new high. So this is our new structure, high, low, high, low, high, close below, right? So I personally shorted right here after this distribution in this previous area of distribution and after sweeping this liquidity. So yeah, right, there's a break of structure in here. I entered at that 750 right about level. And, stop loss was above this previous low high after that break of structure. And then my first target, right below this wick, a new low in the imbalance, about a 1 to 7. And I'm still personally in this. So yeah, price came back to that area, still have some equal highs, wicked in there, redistributed. I just held.
So you basically took out like 80% of the position, or you have the full position still running?
I took out 50% of my position. Because sometimes, it all depends
Yeah.
right where we're at. So after, a smart time frame, 5 minute or 1 minute, in certain areas, if I were to see accumulation or break a structure like bullish to go the opposite way, that's when I'm taking some partials out or knowing like, hey, this could happen, like pay yourself. So yeah, right below these lows and right before it comes deep into that imbalance where I like to look for, right about the 50% of that imbalance. Yeah, I was out 50% of my profits. So up 2.5, 3% right there. And then price created this new low. I'm out another half of that half. So 25% left. And then when price comes up like this and accumulating and all the way up here, I'm break even and I'm just clenching my cheeks, hoping we hit that deeper, create a new low. So yeah, instantly. Yeah, so I'm still in that personally.
A nice play.
I've been looking for, bullishness and looking for an area that's gonna just come and run to take that out. And that's why I've been looking right here. And yeah, we haven't got that yet. So
nice play. Really appreciate your time today, Joey.
Yeah, I'm glad to be here with you.